rising. And meantime, Bitcoin crossing 11,000 for the first time just a few hours after topping 10,000.
Bitcoin futures continue to impress investors around
It's not investing. It has very little to do with investing.
It's the oldest saying in the book: what goes up must come down. And in the volatile world of cryptocurrency, that's proving to be a brutal truth.
The word Bitcoins, which is Google's top search every year. And what is the reason for this? That this word is being searched so vastly. And what exactly is Bitcoin? About its rise and fall. So without using any technical and complicated words, let's understand it in simple words. If we look all over the world, why does anyone give us money? Anyone give us money only when we add some value or do some work in return for it. Even in the office, you get the salary only when you do some work for the company. In a way, money is equal to the value. And from time to time, money has been represented by different things. Earlier, people used to get work done by giving weekend grains. Then gradually, people showed more interest in all those things which lasts longer and their value is high, like gold, but it was not easy to carry gold as well. Then the government provided an option in which you don't have to carry gold. You can deposit your gold to the government, and in return, you will get a receipt, and based on that receipt, you can make transactions, and then later the same receipt will be converted into paper money. Then people trusted a government promise to represent money. Through this promise, the government told that if you go somewhere with this note, then you will get its value. But if it is so, then why not the government solve everyone's problem by printing the notes? So even if the government prints the notes, it won't solve the problem, it will only increase the prices. The problem will be solved only when the resources are complete. Then gradually paper money started converting into digital money. But even in digital money, the biggest challenge was keeping track of transaction. The money you save in the banks, that money is invested by the bank, and if there is any loss in that investment, then your money will be at risk. A particular document was suggested that how our current banking system can be replaced through Bitcoin currency. A man named Satoshi Nakamoto posted a research paper to an obscure cryptography listserv describing his design for a new digital currency that he called Bitcoin. So what does it mean? It means that our bank is maintaining records of all the transactions by a centralized systems and making sure that the transaction is successful. Its alternate can also be seen through Bitcoin currency. When you do any transaction through the online payment method, you get some reward points. Generally, those reward points are used inside Payum only. If those points are used outside, if this happens, and if everyone starts accepting it, then the value of these points will increase. The same thing happens in the case of Bitcoin. Bitcoin is a cryptocurrency in the future. At what level its existence will be, it depends on how its acceptance is, in which way people are accepting it, and where are they accepting it. Bitcoin is a digital cryptocurrency. It has no physical value. When you buy a Bitcoin, it means you buy a specific Bitcoin address, through which you do the transaction on another specific Bitcoin address. Bitcoin is an automated structure that does not require programming or coding. One of the core challenges of designing a digital currency involves something called the double spending problem. If a digital dollar is just information, free from the corporeal strictures of paper and metal, what's to prevent people from copying and pasting it as easily as a chunk of text, spending it as many times as they want? The conventional answer involved using a central clearinghouse to keep a real-time ledger of all transactions, ensuring that if someone spends his last digital dollar, he can't then spend it again. The ledger prevents fraud, but it also requires a trusted third party to administer it. To prevent fraud, the Bitcoin software maintains a pseudonymous public ledger of every transaction. Some Bitcoiners' computers validate transactions by cracking cryptographic puzzles, and the first to solve each puzzle receives 50 new Bitcoins. Bitcoins can be stored in a variety of places, from a wallet on a desktop computer to a centralized service in the cloud. For a while, he was right. Through 2009 and early 2010, Bitcoins had no value at all, and for the first 6 months after they started trading in April 2010, the value of one Bitcoin stayed below 14 cents. Then, as the currency gained viral traction in summer 2010, rising demand for a limited supply caused the price on online exchanges to start moving. By early November, it surged to 36 cents before settling down to around 29 cents. In February 2011, it rose again and was mentioned on Slashdot for achieving dollar parity. It hit $1.06 before settling in at roughly 87 cents. The future of Bitcoin seemed to shimmer with possibility. Mark Supps, an inventor building a fusion reactor in a Brooklyn loft from eBay source parts, got an old ATM and began retrofitting it to dispense cash for bitcoins. On the so-called secret internet, the invisible grid of sites reachable by computers using Tor anonymizing software, the black and gray market site Silk Road anointed the Bitcoin the coin of the realm. You could use Bitcoins to buy everything from purple haze pot to fentanyl lollipops to a kit for converting a rifle into a machine gun. A young Bitcoiner, the real Plato, brought on the road into the new millennium by video blogging a cross-country car trip during which he spent only Bitcoins. Numismatic enthusiasts among the currency's faithful began dreaming of collectible Bitcoins, wondering what price such rarities as the Genesis block might fetch. There are several reasons why Bitcoin has such a volatile price history. Understanding the factors that influence its market price can help you decide whether to invest in it, trade it, or continue watching its developments. Like most commodities, assets, investments, or other products, Bitcoin's price depends heavily on supply and demand. As an asset adopted quickly by investors and traders, speculation about price movements plays a critical part in Bitcoin's value at any given moment. Media outlets, influencers, opinionated industry moguls, and well-known cryptocurrency fans create investor concerns, leading to price fluctuations. Supply and demand influence the prices of most commodities more than any other factor. Bitcoin's market value is primarily affected by how many coins are in circulation and how much people are willing to pay. By design, the cryptocurrency is limited to 21 million coins. The closer the circulating supply gets to this limit, the higher prices are likely to climb. It is difficult to predict what will happen to prices when the limit is reached. There will no longer be any profit from mining Bitcoin. As big financial players compete for ownership in an environment of dwindling supply, Bitcoin's price will likely fluctuate in response to any actions they take. Bitcoin volatility is also driven, to an extent, by these investors. It is unclear how Bitcoin whales, investors with BTC holdings of a minimum of 10 million, would liquidate their significant positions into fiat currency without affecting Bitcoin's market price. If the whales were to begin selling their Bitcoin holdings suddenly, prices would plummet as other investors panicked as well. Bitcoin volatility is also partly driven by the varying belief in its utility as a store of value and method of value transfer. A store of value is an asset's function that allows it to maintain value in the future with some degree of predictability. Many investors believe that Bitcoin will retain its value and continue growing, using it as a hedge against inflation and an alternative to traditional value stores like gold or other metals. Rumors about regulations tend to impact Bitcoin's price in the short term, but the significance of the impacts is still being analyzed and debated. As a means of exchange, gold has been used for a very long time. As such, it is a reasonably stable commodity as far as price, demand, and supply go. Likewise, fiat currency has been around for some time. While exchange rates between countries fluctuate and are somewhat volatile, their values are to a point predictable based on the issuing country and the economic circumstances it faces. Bitcoin has only been around for a short time. It is still in the price discovery phase. This means that prices will continue to change as investors, users, and governments work through the initial growing pains and concerns until prices stabilize if a stable point can be reached. That's all for today, guys. If you have learned some valuable information from this, then do subscribe our channel for more videos.